Hi there, and welcome to the Metaverse Stock Exchange, a brand new place where you can learn about the economy, stocks, crypto, trading, investing, and get all your latest news in a fun, interactive kind of way. As you can see, I'm filming this from the Metaverse, and that hence the name. This is in VR, and right now we are in our office in space. This is our spaceship that's flying around the world. As you can see, we're just passing by Africa and Europe, going straight from for the Americas. We have our moon at the very center and then some stars on the right. This is going to be one of our studios where we're going to film this content, but I will be organizing kind of weekly or monthly meetings in virtual reality where, regardless whether you have a VR set or just a computer, you can come and join me and talk about topics that are interesting at the moment, economies, interesting stocks, and so on and so forth. But the main gist of this is still the stock exchange part of it, which is talking about stocks, markets, and what is happening in the economy. As you can see, we have our screens here, we have our whiteboard here. Let me just say hi to you one more time. There we go. And a kind of nice smiley face. And let's dive right in. This is gonna be a daily video, hopefully, and it's gonna go on what happened yesterday, what is happening today, and what is coming in the upcoming days. So not just what is happening in the markets, but understanding why it is happening. So if we can see, this is how markets closed yesterday. We have the Dow Jones, Nasdaq, and S&P 500 all down, with the Nasdaq getting the biggest beating, down almost 2%. Why is this? We have to kind of look at a bigger picture, and I have that here. As you can see on a 1-month chart, the Nasdaq is up almost 10%. It was over 10% without that decline of 2% yesterday. So it had a really, really nice run in the new year, and it was kind of getting ready for a little bit of a pullback. And there's one other thing, which is, and I'm going to write it here because it's super, super important, and that will be the Fed. So this is the biggest market moving kind of event that's happening in the economy in general, but especially in this day and age of inflation. We have a meeting starting today and tomorrow. So we're going to get the Fed decision coming in today, where we expect the Fed to raise interest rates by 0.25% or a quarter of a point. So going into that meeting, it's normally and usually people don't kind of want to take back a little bit of exposure because they don't know exactly what is going to happen. Also, a market moving event that happened yesterday, and that's why I have it pulled it up here, was the German GDP. As you can see, this is from yesterday. It went in contraction territory. So as you can see, it's 0.2%. The second percentage here, 0.0, that was the forecast. So we were expecting the German economy to be flat, but it was down. And as you know, if you get 2 quarters in a row of negative GDP, that's when you kind of technically get into a recession. So seeing that number kind of spooked the European markets, and then after European markets went down, took down the futures, and then the rest of the day it kind of set the stage for US stocks to fall as well. So that was a key market moving event yesterday, and why it led to what happened afterwards in the US markets as well. With that being said, this is a very, very nice tool. We're going to be watching it pretty much every day. It is the economic calendar. There's many out there, but I use the investing one because it's kind of very nice and clean, and that gives us the events of happening in the economic sphere, so the economic data. For today, these are the main data points that we should be expecting. So we have the Case-Shiller housing data points, and then consumer confidence. Really quickly, we have the PMIs as well, Chicago PMI. I will talk in the different videos of what PMIs are. That's also very important. But today, the housing data and the consumer confidence will be the biggest market moving events. You can see in real life also my my computer as well. You can see the pass-through right there, and then my hand as well. So that's one of the neat features of the virtual reality. getting back in here, not going off topic. Why is housing data important? Housing data is important because the biggest part of the inflation of the CPI index is housing. And what the Fed is using is kind of old data. It averages out the housing data from the last 12 months. But this is the newest and the latest data. And as you can see, we're expecting down months on a month over month basis, which is really, really good because that means that as we progress and as the CPI catches up to these newer numbers, then the headline CPI number should fall down and then the Fed should kind of ease up. That's why we've had this amazing run in January, because everybody thinks that the Fed is going to ease up. Again, that's a different video of whether they're going to do that or not. I'm going to be talking about that tomorrow when we see the decision. But we also have, and this is going to be probably the biggest market moving event of today, which is at 10 a.m. Eastern Time. It is consumer confidence. Why is consumer confidence important? Because the more the consumer is confident, the more money they spend. The more money they spend, the economy is in a better place. But if their confidence goes down, then they're kind of not going to go and buy that new refrigerator or new car or go out as they were going. So that is why if their confidence goes down, it is a very bad sign for the economy. And that's probably going to be the biggest market moving event besides the earnings that we're getting today. Because normally before these Fed days, we are expecting kind of calm days. Everybody shouldn't be really placing really big orders because it is getting to the point where we're waiting for the decision. So you won't see anybody selling a lot or buying a lot. But this consumer confidence will move the market a little bit. Another thing that's moving the markets right now is the earnings reports. And let's go here. So this is a really nice resource when we are in earnings season, and that is the NASDAQ earnings calendar. And I'll probably do a separate video on it, but very quickly, these are the companies that are reporting today by market cap. So it points out the most important ones. And what you need to know is the sun and moon. So the market opens at 9:30 a.m. Eastern Time. It closes at 4 p.m. again Eastern Time. We have a pre-market and an aftermarket. Pre-market is these hours before the market opens, and then aftermarket is after it closes. And companies do not report earnings while the market is open. So that's why when you see the sun, that means that these companies are reporting before the market opens. And since this video is recorded right now before the market open at 8 a.m. Eastern Time, then we are getting these numbers right now, whereas these we're going to be getting later on after the market closes. And after the market closes, we're going to have Advanced Micro, AMD, that's going to be huge for the chip sector. Amgen is a biotech firm. And we have one more stock that it will be our stock of the day. And I'll talk a little bit more about it later on. But right now, we're going to see the earnings of Exxon, Pfizer, McDonald's, and Caterpillar. I have that. UPS as well. If we go up here, I do not have UPS opened up, I believe, but we're going to check these out. So here's a sneak peek of the stock that we're going to be the stock of the day, which is going to be Snapchat, but that later on in the video. For right now, we're looking at Pfizer, McDonald's, Caterpillar, Exxon, and GM, also another company that reported today. And as you can see, this is Webull, my trading app, really nice app. Not sponsored in any way, but that's the app that I use. If you like to use a very kind of nice, easy to use app with a lot of kind of data and information on there, I highly recommend it. So with that being said, this is what we see. This is during trading hours, and that's why we're not. This is how they closed yesterday. But since we are in the pre-market, as I said before, this is what we're going to be looking at. So this is the live data in the pre-market or after hours data. And as we can see, 4 of the 5 companies, the only company that it is positive is a GM because it really had blowout quarters. But all the other 4 companies are negative. And that's a little bit of a surprise because most of these companies beat, like McDonald's beat on the top and bottom line, Exxon beat on the top and bottom line, Caterpillar beat on the top line. The bottom line, which is the profits, they had a miss, but they said that it was due to an accounting thing. according to them, they also beat on the bottom line as well. They had some expenses that they needed to write off as a loss. And by looking at the market reaction, this is the most important thing. So if we see that even though are beating and they're going down, that's not really giving us a positive signal of what is going to be happening in the market today. So that's the main takeaway that we need to take from today. So the market is very highly going to kind of go down or either stay flat or go down, uh, depending on that consumer confidence data. But I really do not expect the market going higher today. In order to see where the market is right now, let's go here, I believe. No. Okay, right there. We have that, and then let's check the futures data really quick. We could have checked it on Webull, but I have it open up here, so it's easier for me to check it out. So we have the Dow Jones put, S&P put, and Nasdaq put. Again, what does this say? This is pretty much those in just their futures, which is what they're doing in the pre-market. And as we can see in the pre-market, we are down a little bit. This is the S&P put, but just by 0.15%. So this is picking up the data. All of these indexes were lower before I started to open, and now they are going towards the flat line. So a little bit of a contradiction because all the earnings reporters did kind of miss and they were going down. Well, sorry, they were going down, and now we are seeing that the S&P futures is going towards the flat line. But as I said, my beliefs is that today we are going to see the market going in a negative direction. With that being said, let's go over to the main stock of the day, which will be Snapchat. So the best trade that I believe somebody can do today is Snap, because if we go here, so this is Snap's chart for the last year. And as you can see, every time this E represents their earnings report day. So here, when they reported earnings, the stock slumped from 75 to pretty much in down to the 50s. Then there was another slump here when they reported, again, a huge 15% move. Then we have another huge move downwards when they reported there, and then a huge move downwards where they reported here as well. Why am I saying this? Because Snapchat has been consistently kind of missing their estimates and having a very, very big move on their earnings day. Not to mention that the overall trend for this stock has been downwards, and as you can see, it went from the 80s, the high 80s, all the way under $10. So with that being said, that's pretty much the bad, and let's see what is the good. Let me get my mouse in here. So if I kind of zoom in towards the what's happening right now, is we can see, let me get my controllers back. So in 2023, we've seen that the stock has gone from pretty much $7 to $8. That was the lows. We have the low right here, $7.50. Now it's trading in the $11 range. So we have seen a 30% move from the lows during January. And the market expectations are that they're going to see a loss of 10 cents. Keeping in mind that they had a profit last year of just 1 cent in this quarter, and this being the biggest quarter for them, I would not be surprised that they beat that estimate. That is a very, very low estimate for this quarter. So kind of the expectations are set that they're going to miss and it's going to be a very bad day. Options data also tells us that there's going to be an implied move of around 10%. So this is the best kind of trade for today. Definitely in the options market, going up or down 10%. Very risky, again, as we noted before, when they reported it had really, really big swings. It has been on a downtrend, and I do believe that the expectations are so low that they should be kind of exceeding those, and hopefully hopefully having a really nice uptrend. And as well, they are going to set up for Meta and Google. Meta is reporting tomorrow, and then Google's reporting on Thursday. So if you have some Meta stock or Google stock, or you're planning on buying those, keep that in mind that they will definitely move. I know when this happened, when Snap went down like 20% here, Meta moved by 5, 6, 7%. So they are definitely correlated in that sense. So if you see a positive move here, you're going to see a positive move in Meta and Google as well. And that's kind of a sign of what their earnings should be looking like. So Snap will be our stock of the day. Let me put it up here. Snap is our stock of the day, and I do expect markets to be lower during the day because it is very unlikely for markets to go higher a day before the Fed makes the big decision. So hopefully it was helpful. It is my first video, so please don't do a lot of hate on it, and see you in the next one. Thank you.